This is Randy Finney with Right Side of the Chart, and this is a late session market update for Wednesday, November 27th, 2018. Just wanted to take a look at where things are and what I'm watching right now. This video will be quick. I'll start out here with the a follow-up with the post I made on the front page of rightsideofthechart.com. And I just wanted to make mention that the homepage has changed a little bit. To get to the post now, you just need to scroll down a bit. That's the landing page. You come in here, and the recent posts are down below. So I did make a post before the market opened today with levels to watch on QQQ and SPY, which we're going to look at today. And I think these levels may determine where the next 3% plus in the market is. So I think they're pretty important to keep an eye on. So here's the post, and again, it's a public post, so anybody can read its general market analysis. But let's take a look. Let's blow that chart up so we can zoom in a little bit, and let's do that. Zoom in a little bit here. So what I'm watching, and again, this was how it was posted this morning. So this chart is reflective as of yesterday's close. And I laid out a couple scenarios here. Well, a bullish and a bearish scenario. And as I usually do, I stated my preference being I'm leaning towards the bullish scenario, but I need to make very clear that the trend remains bearish. The intermediate trend, even the short-term trend, remains bearish. Just in the very, very short term, what's going on is we've been consolidating. And in fact, let me talk about that when we get to the updated charts. This is again this morning's chart. So the scenario laid out this. I'm watching a couple levels on SPY and QQQ. And on SPY, we have a what I call a confluence of resistance. I have a resistance zone, which is what I call it when I have two resistance levels in close proximity like we do here. So there's your resistance zone. And just above that, or really today coming in about the middle of that zone, is this downtrend line or potential downtrend line. So I do believe that if we can pop above there, probably only will take out, we'll probably just need to take out the downtrend line. And if that happens, I think we'll take out the 269.55 level. But it would just help to see that one taken out. And if so, we're looking at about a 3% rally up to the 275.13 area. I don't see much stopping. I think there's enough in the charts to indicate we've been consolidating recently. That's building energy. And so that would be the bullish scenario. But as I often say, resistance is resistance until unless broken. So we're going to get to the updated charts in a second. Now, if we fail here, and this is again what I was detailing this morning, then a failure here will likely bring us back down to the bottom of that zone, which is the recent consolidation zone, which is also pretty significant support. I mentioned this last week around 263.44-ish, maybe a little lower. We'll call it 263.40. And then a break of that level, I think, would open the door for another sharp leg down, maybe 2-3% or more, and maybe even complete this wave of this correction, and then put in a nice tradable bottom. So you need to be careful. That's still the trend for now. Let's look at the other chart that I posted in that front page post. QQQ, basically saying the same thing. We had this downtrend line to watch, and 163.45, we'll call it, sort of break above the downtrend line, and 163.50-ish would be bullish, while a break down below the lows, just like in SPY, if we take out the recent lows, that will be bearish. I talked about the PPO signal line being a trend indicator. Let's just focus on the updated charts here. All right, so these are the live charts. So you can see not a lot has happened since that was posted this morning. Here's today's trading. If we zoom in here, and let's do that a little bit. Let's zoom in on this chart. So this is today's trading session right here. Is that right? No. Today's trading session is a little closer. These are 60-minute candles. This is today's trading session. So we really haven't done much. We're in this very tight range. And again, the bigger picture is this. This is our recent trading range right here. Let's draw that out a little bit differently. So if you're frustrated or have been for the last few days, this is normal. This is consolidation. And from these consolidation periods usually comes some pretty good moves. So we're going to break one way or another. And, although I'm still leaning towards the upside, that's, again, there's work to be done. And so what happened today, let's just take a step back. Let's start with QQQ, because QQQ broke out. And I mention this all the time, that there's a lot of indexes out there, and the more you can track to confirm breakouts in one and then the others, the better. But to keep it simple, I really focus on QQQ and SPY. And as I will always say, if you have two, and you usually do, if you have two comparable support or resistance levels on both QQQ and SPY, meaning they come in around the same. In this case, we have these trend lines, which are comparable. They're not exact, but they're very similar. And you also have some horizontal resistance there. You need to see both break out. If not, what can happen is the first one breaks out, so you think you have a buy signal, but the other one fails, and that still may happen. I just showed you SPY. We've been testing resistance all day. So you can see QQQ broke out this morning above the downtrend line, but I had this level here since last week, I believe 163.45, and I mentioned that that would have to go. I said about, give it a little margin error, 163.50. And you can see so far today, these are all 60-minute candles. Look at how well this technical analysis is working. These little skinny parts, they're called the wicks or candlestick shadows. That means we popped above their intra-period brief spikes, which is normal with the volatility. But if you look at 1, 2, 3, 4, 5, almost if this one has the potential for 6 consecutive candlestick closes below that level. See, each candlestick body is right up on there, virtually touching that level. So what is that telling me? Well, QQQ is so far stopped, and it has failed to take that level out. Something to watch as well. I use the PPO as a trend indicator. The PPO signal line, which is the last of the two to cross, that's a 9 EMA. That's a white line. You can see that typically when the PPO signal line is above the zero line, the trend is bullish. And when it is below the signal line, the trend is bearish. And right now, here is a bullish trend right there. You can see the market rose during that period. So right now we're back testing, and the zero line, which is a dotted line here, often acts as support or resistance when tested from above or below, as it did right here, as it did several times in here. So this is something else. Now, one of two things are going to happen. Either this breakout will occur, in which case we break out. You'll probably see prices, especially once all eyes seem to realize the breakout has occurred, you'll start to see probably a pretty good size move up here. And you'll see the bullish crossover. Or we get rejected if QQQ fails, and that may happen today. Maybe they dump it into the close. Maybe they buy it up into the close. All I'm telling you right now is we're at a pretty important near-term inflection point. If you're a long-term trader, investor, all this stuff is for an active trader. But what I'm looking at here, if we do break out, I see about 3.5% upside on QQQ. Let's see, up here at about 168.67, so that's about a 3.5% gain from where we're at now. If we can break out, I think we'll have a little reaction here at 166. This is my scenario. Pop up, have a little reaction there, and then come up to at least this level here. If that happens, it will also help to firm up some bullish developments on the more significant daily time frames. Those potential bullish developments that bullish divergences I was highlighting recently on QQQ. SPY is close, but not there yet. But again, QQQ will not rally 3.5% without SPY coming up as well. So the two are dependent on each other, and there's a lot of overlap, of course, with the top components. Here it is, SPY. We go back to that level, so we have the downtrend line. Really not a whole lot has happened since that post I showed you from earlier today before the market opened. So far all day we've been pushing there, trying to take out the 268.12 resistance level. We're still below the downtrend line, and I think if we take out the downtrend line, we'll take out 269.55. And then on SPY, you're talking, this is about I don't see a whole lot stopping SPY until about 275.13. And that is, I believe, about a 2.9% gain from where we're at right now. But as you can see, look where the trend indicator is. So we're at an important inflection point. So like I said, we could turn down here. The trend and the status quo has been sell the rips, or periods of consolidation have been followed by moves down. But that won't always remain the case forever. There are some things starting to firm up in the charts, and it really appears to me, watching that price action today, it appears to me that the QQQ, the tech-heavy QQQ, which led the market down. Those big FANG stocks were really, started this whole correction and led it most of the way down. Recently, we've seen some sectors in the S&P 500 and really the quote unquote safety dividend stocks starting to break down. Today, what's going on is the industrials have been weak, basic materials. Those are things that are heavy in the S&P 500 and not so much in the Nasdaq. So I think that's what's holding back the QQQ from rallying and breaking out is really right now in SPY. So those are levels to watch, and you can trade it either way. I'm still leaning towards the upside break. But you have to respect a failure here, especially an impulsive move back down to that 263.44 level. Let's move it a little lower here. We'll call it 263.15. You want to be safe, round down 263. A break, an impulsive move below there could really start some waterfall selling. It's not my preferred scenario right now, but it's one I will certainly respect. Right now, I've been leaning towards a near-term bullish case, and this is what I'm expecting to happen, or I think may happen. Can't put the highest probabilities on it, but I think there's a decent chance. But we need to, like I said, resistance is resistance until unless break taken out. So let's watch for a breakout above 268.12. Better yet to see a solid 60-minute candlestick, a big green candle close above that level. And then the final, really, I don't see a whole lot. If they can take out 269.55, I don't see a whole lot stopping SPY until 275.13. And as I mentioned, that will help firm up things on the daily chart as well. So there it is, guys. We might not have resolution today. It's 3:38 right now. Even if they pop it above there by the close, we'd have to see a heck of a move to give a solid breakout and close there right now with just over 20 minutes ago. So this will probably have to be continued tomorrow. And what the markets tend to do in a situation like this when they close right at resistance, here's what you probably expect tomorrow: either a gap up and above to leave the wannabe longs, those that were wanting to position on a breakout here, deny them an objective entry with a gap up and above that level, and then a big run up to 275.13, or the opposite, or a gap down for those that are already positioned long for it, to gap down and maybe even take us to the bottom of that range or below. I don't see us gapping anywhere below there. That'd be a pretty big move. Let me measure that out. To get back down to the bottom of the range, we'd have to drop, well, it's certainly doable, about 1.8% on SPY, and the recent lows aren't as well defined on QQQ, but let's just say we have to go down 3% or more. So there it is. All right, we'll wrap it up here, and I will post an update tomorrow. If anything big happens in the futures overnight, I'll get a post out in the morning on rightsideofthechart.com, at least as I did today and I've been doing recently with some static charts to just kind of see the levels to watch. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.